Welcome to the end of day review for Friday, the 24th of November 2023. Kicking off with a quick overview of the economic calendar. What you can see is there was some German business climate news at 11, so during the London session. However, that was medium impact news. And then subsequently, in the New York session, we had manufacturing and services PMI for the USD. As you can see, the results were somewhat mixed, both positive and negative, so in terms of fading the news, either direction would have made sense. Quickly recapping on the charts for today, well, my live charts, that is, starting with GBPUSD. We're still in this confirmed bullish market structure, and essentially what had happened is around London, we were somewhere in here, and my idea was, because this ERL continuation OB had effectively reached its target, I then created this mitigating OB off the back of the fact that we wicked this level and the CPB is in here. So I was just waiting for price to come back in here before I would long. However, I am considering reviewing my 4H rule set, especially in confirmed market trend scenarios, because essentially there is more than enough reason to validate why we should continue to go long. But there's just a few factors to consider, such as the daily liquidity levels and what is the objective of price, especially given that we've broken for each external range liquidity. So if we look at it, Thursday took out the 4H swing high, which was somewhere here, and then in terms of daily liquidity in what's to the left, there was this liquidity level which was taken out. We then saw the pullback, and where did price pull back into? It was into this imbalance level on the daily, and then price resumes. So if price is resuming the supposed 4H market structure trend, where is it going? There's no imbalances here, so the next logical target is probably this level right here. So on the daily, we have reasons to continue to go long, because this liquidity sweep got its reaction. And so what I'm considering is perhaps taking into account the existing control on the 15-minute and maybe the 30-minute as well. What you can see is that demand was in control all this time, and my idea was for one side of the Asia range to be broken, which would mean that a new low of the day is set, and given that fact, it made a lot of sense for the new low of the day to be somewhere in here. If we look quickly on the 5-minute, going on the premise that demand remains in control, which is true, then the question is, how do we validate the order flow that's been happening in this range? And I don't quite have an answer for that, which is something I need to consider and think about, because otherwise it just feels very arbitrary. Anyway, that's GBPUSD. EURUSD was far cleaner. And I'll go through my charts quickly. So again, quickly recapping on the 4-hour, much like GBPUSD, we have the confirmed bullish market trend. We then had a change of character and the pullback phase validation with this chain. This pullback phase then subsequently failed with this body break, bringing us back into this primary leg OB. And once that occurred, then we pretty much had free reign to go long. So when the market opened, we were roughly in here. So we already reacted to this primary leg OB on the 4 hour, and we began creating a primary leg on the 5 minute and 15 minute. What you will then see is there was effectively a demand chain, like I said, built on this new primary leg. And then from there, we were effectively waiting for one side of the Asia range to be taken. That was taken, but what you could see is that order flow shifted temporarily, and then we had the change of character and the break of structure. However, I was hesitant to take an entry in here because of the fact that we hadn't yet validated the new primary leg. I wanted that body break, which we then subsequently got in Frankfurt. So the Frankfurt range broke, and then London had a nice candle break of structure, which then validated that the primary leg is continuing, and validated these demand levels as primary leg demand levels. I then ensured I entered in the discount area, which was around here. We had some nice liquidity in the leg of this OB, and I didn't see the need to cover the Asia low of the day, given how far price moved before returning. So I took this entry, and then during London, I managed to find a continuation. What you can see is once price came here, we tapped into this OB, made a new break of structure, effectively carrying on the demand chain. And once that had happened, I then identified where my discount areas are and where liquidity is likely to be swept, which was somewhere in here around the 50% level. Given that we're playing New York continuations, it made sense to enter here because the momentum, if it kicks in New York, is unlikely to come all the way down. I then evaluated that this entry point is sufficiently far away from my initial entry, so I broke even this entry over here, and I thought the second entry should have enough space to take any liquidity it required, and then continued from there. And yeah, it played out quite nicely. We had US PMI come out around here. What you can see is that price reached the 4-8 CPB level right there, but yeah, essentially once we reached that level, price came down, resumed back up, and that was the end of the trading session. My targets were somewhere around here, just because that was the ADR, that's the ERL target, and there wasn't much IRL in the way. I mean, there wasn't much of anything in the way, actually. However, once the trading session ended, price pulled back, and at this point I knew that it was unlikely that we were going to continue to go there. So my decision point around here was to say, okay, let's evaluate how the 4H candle closes, which was this candle at around 8 p.m. my time, and 8 p.m. is roughly here. So I close my positions around here. 8 p.m. there and there. So effectively we had about 4.5 hours plus 2 hours, so about 6 hours available for the day. The targets were more aligned with with 10 hours being available. However, I did also partial at the substructure level, just because my account is in drawdown and I'm building it up, so it just made sense to pay myself. And also the fact that PMI news was a question mark in terms of what the results would be. It could be that it brings us back down. At least that way I paid myself and limited the emotional response on that side. Yeah, that essentially is the end of my review of my live trading for today. I'll overlay some some markups of my technical analysis when I do the fresh charts for my end of day data collection. But yeah, have a good weekend and we'll chat again on Monday.